Welcome back to the Small Business University. My name is Christopher Reagan. In this video, we're going to talk about your new business and how to set up some of the pieces of that business. Specifically, we're going to get into some of the general aspects like bookkeeping and payroll, office space, lots of different things that you may be wondering about as you get started. And the Small Business University's purpose is to, of course, expand on some of these things in great detail, but this is somewhat of an overview of what we'll be talking about through the rest of the course. Speaking of an overview, here are the 8 topics I want to cover. We're going to start with creating your corporation, opening bank accounts, regulations, sales taxes, your office or your storefront, then go into employees, insurance, and then kind of finish up with bookkeeping. This is not an exhaustive list of everything that may go into opening a new business, but it is probably the top 8 things that I get asked about from new business owners as a CPA, and I want to go through the advice that I give them in the same way as if you were sitting in my office engaging me to help you with your business. I'm going to give you some of these details now, and you can implement them in your business. So we have another video that is strictly about corporations and business entities. I would encourage you to watch that, but a couple of things to mention here. I am a huge proponent of S corporations. And these are usually corporations that are either corporations or LLCs as formed with your state, and then using the form 2553, you would make it an S corporation. You do have to register your corporation in any state you operate in. So let's say you decided to set up a Delaware corporation, which I don't necessarily advise unless you live in Delaware or plan to go public very soon, but let's say you did. But you operate in Colorado. You will also need to register your corporation in Colorado. So in kind of effect, you've ended up where you have to pay both states for your corporation. And then let's say you operate in 10 other states. You have to register in each state that you plan to operate in. And operating is a definition of, do you have employees there? Do you have buildings there? Do you have fixed assets there? It doesn't mean that you just sell to someone in that state. So let's say you sell things on Amazon and you sell something to someone in California. You do not need to be registered necessarily in California for just being able to sell to that person. Now, you may need to be registered in California for sales tax, which is what we're going to get into here in a little bit. But if you are doing a lot of multi-state work or have people in multiple states, you definitely need to be thinking about registration in each of those states. You also need to be checking the counties that you are in, because several counties will have usually a very simple type of registration or a small fee that you need to pay. So make sure that you call the county that you're operating in, or if there's several, call the several counties and say, I'm starting a new business. Is there anything I need to register for? You definitely may also need to register with the state for any kind of professions that you do. So if you're a physician or an accountant like us, you need to register with the state to be able to offer some of that accounting work. Annual meetings, make sure that you're having annual meetings. This is a requirement of corporations. And also beware of scams. As soon as you set up your business, you're going to get a lot of mail, and you need to look at each piece of that mail, because some of it may be important. But there will be others that look like they're official, and they really are not. They're a company that's made their letters look like they're from the state, saying you need to pay us $130 to do your corporation minutes. But believe me, it's not real. And one of the ways you can find out is by calling your state agencies and asking them about that letter. And also, if you read the details of the letter and look at some of the fine print, you will see something like, we're not affiliated with the state of Colorado. This is a promotion, or this is marketing, or something like that. Usually they will disclose that in the very fine print. So just be aware of that as you're getting into your corporation and trying to operate it day to day. So as soon as you have your corporation open and your registration's done, the next thing you're going to do is open a bank account. Now, my advice here is open your corporate checking account where you're going to also have your personal checking account, because it is very important to be able to kind of transfer money back and forth. You don't know when you may need to put more money into the corporation, and you also don't know how often the corporation is going to need to send you money in the form of distributions or dividends. So open a very simple account. It doesn't have to be fancy at the bank that you're going to keep your personal account at. And remember, you're going to need your state corporation documents, okay? So the articles of incorporation or the articles of organization that the state gave you when you set up your company, and you're also going to need your EIN letter. So this is the letter from the IRS when they gave you your employer identification number. You're going to need that as well, because the bank uses both of those to verify that your corporation is legit. If you don't have an EIN and you're watching this, go find the video about setting up your EIN. And in that video, we show you how to go online and set up your own EIN, and it's really easy. Sometimes corporations will have separate checking accounts. So if you're running a lot of payroll, you may have a separate payroll account. If you need a savings account where you're accumulating profits to some degree, you may want a savings account. But let me tell you this. Don't keep more than 2 months worth of expenses in there, at least at first. You don't want to keep massive amounts of money in your corporate checking accounts. If you're accumulating more than, say, 1, 2, 3 months of expenses in the checking account, do a distribution, do a dividend to you and the owners, and get that money out of there. Because the more money that you keep, if somebody were to file a lawsuit against your company and they win, that money is basically there to take. So use your own judgment, but I try and emphasize, especially to small corporations, don't stockpile $100,000 in there unless you spend $50,000 a month in expenses, and you may need it in case revenue slows down in a given month or two. And then finally, make sure you are employing bookkeeping software. So at Small Business University, we're big fans of QuickBooks Online. It's very easy to set up. It is very easy to use. It is online, and it is very inexpensive. So all you have to do is set that corporate checking account up to your bookkeeping, and in some other videos we're going to show you how to do the bookkeeping, and you should be a pro once you get through all the Small Business University videos. So as I touched on a little bit before, state and local governments do have regulations, and you need to be aware of what they are, or call those government entities and do some research and find out. Do not rely on accountants and lawyers to know what these things are either, because I can assure you they are not trying to keep up with all the different regulations that coin-operated laundries need to be understanding and abiding by. So most regulations are industry specific. So if you're in a certain industry, let's say you're doing commercial fishing, you have certain regulations that you have to follow and licenses that you have to get. So just do your own research here. Do not outsource this, because most people will not know. And if you call the government agencies to ask what they are and how it applies to you, you may have to wait on hold for a little while, but mostly those folks are very helpful and are there to try and make sure that they don't have to send you a bunch of letters and waste their time doing collection efforts or enforcement efforts. So just make sure that you're aware of not only what you need to do when you open business, but what you need to do every year. And I often run into small business owners that find out that they missed one. You know, the last line here is, don't panic if you find out that you missed one. Don't panic. Just call, find out what needs to be done, kind of admit that you didn't know that it was there, and how can they make this as easy as possible on you. Because again, regulation generally is there to make sure everybody's abiding by the rules, but at the same time, they want to try and help you abide by them and clear up whatever issues you may have, and and get going again. So don't panic. Just call them. Don't hide from it is basically what this should be. That kind of goes for IRS things too, right? Don't hide from the fact that you need to file your taxes. If you miss filing your taxes for a year, come back and say, I miss filing my taxes. I need to get this done. Let's get it done and get myself and my business above board. So here's sales tax. And, sales tax, I'm just going to tell you, is not a lot of fun. And if you are in a retail or service business, you may be subject, retail in almost most cases, and service businesses in some cases, are subject to collecting sales tax. And the way that sales tax works is, let's say you charge somebody $100 for your product. Well, you may need to charge them, actually have them pay you $106 because $6 needs to go to the state for sales tax, and you collect it from the consumer or the client, and then you pass that on to the state sales tax agency once a month or sometimes even more often. Most states publish a document on what types of business need to collect sales tax. And if you do need to collect sales tax, it's not fun, but it's easy if you just take the time to understand it and take the time to understand what you're supposed to be doing. If you operate in multiple states and multiple jurisdictions, it definitely becomes more complicated. And at the bottom of this screen, I've suggested a couple of different apps. One's called Avalara and one's called TaxJar that are great apps for helping you manage all of your sales tax. So it helps you not only collect sales tax, but it helps you remit sales tax, helps you do the sales tax returns, everything that you're going to need to be doing to be compliant with sales tax issues. Also, your point of sale software oftentimes will help you calculate what your sales tax is supposed to be. So let's say you're running a restaurant or something like that. It will help you calculate that on every ticket that you run and then aggregate everything up and send it over to the sales tax agency. Again, knowledge is the power here. So if you just need to take the time, take an hour to understand how sales tax works and what you need to remit, and you will find it immensely beneficial for the rest of your business ownership instead of having to, necessarily rely on accountants and outside folks to tell you how to do all this stuff. Now we can talk about the office. If you're going to have an office or a storefront, obviously most businesses that don't need storefronts start in a home or in some kind of small space. My advice, whenever you decide to get space, is get space you can grow into but is not too big. So get space that's a little bit bigger than what you need, but not so big that you have, cavernous, empty areas that you're not using. And the reason being, it is most business leases, most commercial leases can last between 3 and 5 years. So you need to be thinking in terms of what am I going to be doing in the next 3 years. Don't get too optimistic about it, because if you do end up growing explosively, you can always renegotiate leases, pay a little bit of money, get out of leases, and maybe set up a second office that's in another place until both the leases are over. But you do need to have a little bit of space to grow into. Keep one thing really, really in mind. Everything when it comes to leases is negotiable. Don't feel like because they quoted you a rate that that's what you have to take. Now, they may reject your negotiated lower offer. That's their prerogative. But never go into a lease just absolutely paying whatever they want. Say, well, just negotiate it down if you can. Everything is negotiable in this world. Usually I recommend that you rent rather than buying a space. I know it sounds cool maybe to buy a space, or you feel like you won't waste as much money buying a space. I can assure you that most small businesses that I've seen buy a space regret it later. And if you've been operating your business for 5 years and you kind of know that this is about the size of the business it's always going to be, then maybe buying a space is good. But if you're brand new, I would not buy anything until you really get going and understand what your needs are, what your location should be, all of that. There is something called build-outs whenever you're leasing a brand new space, usually, where the landlord will give you credits or possibly even cash to help you build out the interior of the space, because several times it's what they call vanilla shell or gray shell, meaning it's got nothing in it. It may not even have carpet in it. And that build out, when you build that out, is almost always the landlord's to keep. So usually they will offer some kind of credits to help you build it out because essentially they get to keep it. Do your homework. Don't get overly excited to try and take on a space or rent when you don't have to. Remember, at the end of the day, this thing is just costing you money. So don't get caught up in, gosh, I just want to, get the greatest space and the best space and spend all this money. Wait until you know what your business is doing and what your success is going to be before you really, really get committed into something super expensive. And make sure you account for taxes, CAM, which is common area maintenance, utilities, and more. You'll end up seeing that there are more expenses than just the rent. So something may say that it is, you're able to rent something for $15 a square foot per year, but that probably doesn't include the taxes, the CAM, the utilities, and everything else. So just be sure to ask these questions to find out what your total rent per month is going to be, because it could drastically change what your affordability for something like that is. Another question that I get, usually not right off the bat, but at least within the first year, is when should I start hiring employees? And again, my overriding advice is don't get too excited to do this, because once you hire employees, it is a slippery slope. You will almost always then have to have employees. You will set up business processes that require employees. Your customers will get used to employees. So it's not something that you can kind of go backwards from. And a good rule of thumb is you should be working at least 50 hours a week in your business before you need an employee. So if you're not working that much in your business, then you probably do not need an employee. Now, if you're doing your business part-time and you're doing another job part-time and you're thinking, well, I don't have any time because, between the part-time job and this, I'm working 50 hours. You need to quit your part-time job and you do this. You need to do your business 50 hours a week before you hire someone. Never hire someone because you yourself are working at part-time. It will be a disaster. I know that may be a little, arrogant even that I say that, but trust me, I've never seen that work, and I've seen hundreds and hundreds of businesses. So it is not a good idea. Get yourself in there 50 hours a week before you even worry about somebody. Keep in mind that employees cost more than just what you're going to pay them in their salary or their hourly amount. There's payroll taxes, there's benefits, there's more. Usually, starting with contractors is a good idea, meaning that they're an independent contractor, they're not an employee, and you pay them, for the work that's done, they may be part-time. But just keep in mind with contractors, they do get kind of preoccupied with their business too, especially if they're only working for you 5 hours a week or something. They're trying to figure out a way to work 40 hours a week doing what they do. So they could be a little preoccupied. I generally start new employees on a 90-day review period. And the best advice I can give you is get to know the employment laws and do your homework. Understand what you can and cannot do with employees, from the interview to how you treat them to what rights they have at your job to termination. Make sure you know what the laws are. Don't rely on somebody, and don't go in it thinking, well, I think I know I've had jobs before. Trust me, you may not know what the law is. So do your research, do your homework. Insurance is kind of a quick topic. There's a lot of insurances out there, okay? Some of the ones that you're going to need is, if you hire employees, you're going to need employment insurance, because this is insurance that employs you against issues that may come up where the employee has a deficiency that they can file a lawsuit about. They're mistreated, sexual harassment, all kinds of things. Liability is the liability insurance on the premises of your business, and sometimes that umbrella can extend to other perils. E&O, which stands for errors and omissions, is something, if you're a professional like what we do in accounting, we have errors and omissions insurance to insure us against us doing a tax return wrong or doing bookkeeping wrong or something like that. But there's many, many different insurances. Here's my advice. Find an insurance agent that can handle most, if not all of it, and source that need to the agent to to where they can kind of be responsible, and you've got one line of responsibility. You've got one person that you go to for all of these things. Yes, if you piecemeal it to different companies, you may save a few $100s, but trust me, there's nothing better than having an agent that you can go to for any insurance situation, and they're kind of on the hook for it. They will pay much, much more attention to the advice that they give you if you go in saying, I don't know what I need, show me everything that you've got, is this everything that I need, and really take insurance seriously, especially as you grow. Once you get past, say, the $300,000 or $400,000 mark in revenue, insurance becomes a big deal. You're doing enough work that you need to be, whether it be sales or anything, you're doing enough where you're going to need the right kind of insurance. And finally, a little word about bookkeeping. So I see most small businesses for the first year, usually they will, if they want to get an accountant, which isn't necessary in this day and age really, but if they want to, they will come after they've maybe been operating for a year and they've got all this back financial bookkeeping to do, that kind of thing. Do not leave this till then. One of the first things you should be doing is getting a bookkeeping system, regardless of how minuscule your need is. Maybe you're only doing one invoice a month or one sale a month, and maybe you've only got 5 expenses. Still, order QBO, pay the $10 a month or whatever it is, and start doing it right. Because bookkeeping and financial statements and financial planning are key elements to how you're going to make decisions later. This class that you're in with the Small Business University is going to show you how to do pretty much everything you need when it comes to bookkeeping and financial statements. It's our belief that we can teach you how to do that, and if you watch the videos and take it seriously, I think you're going to come out knowing how to do everything. You're going to need financial statements not just to make business decisions. You're going to need financial statements to do tax planning. You're going to need them if the IRS ever asks to review your business, because they will ask you where your books are. They can ask for that in an audit. And if you say, I don't have any books, you're going to lose. So don't fear it. You can do it yourself. Watch the rest of the videos in here, but let me just emphasize, bookkeeping is a must. You must have some kind of way that you're tracking financials, and you should be using a system like QBO to do it so that it's professional and it helps you do most of the things that you need to be doing. So if I were to summarize, the whole video here, it's take the time to learn. You've heard me say that probably on half of these. Take the time to learn stuff yourself. And then if it's something that you absolutely don't know how to do, outsource it to a professional when necessary. Don't hire until you are working a bunch of hours. Bookkeeping's a critical function. And then finally, and I usually say this at every meeting that I end with a new business owner, that first meeting, I say, take the time to relax. Take the time to relax and say you've got this. Yes, there's going to be frustrating moments. Yes, there's going to be things that you're not quite sure how to do. But if you relax, you say you've got this, and you take the time to figure out a solution, you're going to be successful. The thing that I think breaks down most businesses, most new small businesses, is owners panicking or believing that something is going wrong that they can't fix, that if they just took the time to understand the problem and say, yes, this is a problem, let's just fix it and move on, they would, in most cases, be very successful. Instead, they want to quit. And that's what you can't do. So relax. Everything's going to be just fine. And that's the end of this particular video. We've got several more for you, so I will see you in the next one.